everyone is doing well. And first of all, Happy New Year, right? So hopefully you had a good time during the last weeks, right? We were able to enjoy it a little bit.
Yeah.
So actually, it's our first meeting today about crypto. Sorry if you were planning to go for the Monday meeting. Finally, we couldn't have it, but it was it was only pushed for next Monday instead. So first of all, like just brief introduction. I think there is a okay, that's good. So yeah, first of all, brief introduction. I know there is probably a lot of people that are coming for the first time. My name is Bryce, and we do those meetings quite often. So it depends. We can do up to sometimes for a month. We try to just touch crypto. We also touch stocks. We just look at different strategies, different ways to invest, and we always encourage people to talk, to share things that you have that you're doing as well. So, without saying more, we're probably just going to start this meeting. So, today we're going to talk about just cryptocurrencies, an introduction. A lot of people are asking for it. Just basically, like, how do we start with cryptocurrencies? What's like the best way to find cryptocurrencies? And to talk about that, there is Emmanuel who's going to be able to show us all of that. Emmanuel?
Yeah. Yeah. Thank you very much, Bryce. Hi, everyone coming today. Uh, I've been investing in crypto and stocks actually for about 5 years now. And I started investing in crypto since 2018. I do long-term investing as well as short-term investing in crypto. And yeah, I'll be glad to share a little bit of the knowledge with you guys. And yeah, definitely today we're going to have a little bit more of a open stage where uh, we can share our knowledge together. And if anyone has any like questions or a particular crypto that you would like to have an opinion on or an idea on, you can definitely share it in the chat and we can look over it together. So sorry about my voice. I got flu last week and I haven't fully recovered yet. But yeah, I'm glad I can handle the meeting today.
Mm.
Uh, all right. So I don't know exactly how many people here have been investing in crypto already, or to say I don't know exactly like how advanced we all are in the group right now. But I'm just gonna go in the on the basic of doesn't know anything about crypto, and I'm gonna talk like plain words where I'm just gonna like go look like I'm talking to somebody who doesn't know anything in crypto. So I'm just gonna share my screen real quick.
So, sorry, Emmanuel, just one thing. It looks like you're cutting out a little bit.
Oh, really?
Yeah, only sometimes though.
Okay. Yeah, if I continue, and I will try to change my. All right, everyone can see the screen now.
No, it's not working.
Okay. Okay,
Is it
I'll
okay
try.
now?
Not sure why. So basically, let me try to try. I'm just gonna leave that and retry. I want to share my screen. It's coming up.
Yeah, that's good now. I think it's working.
So yeah, the basic idea of cryptocurrency.
So, sorry,
Okay.
Emmanuel. Emmanuel, sorry to interrupt. It looks like, yeah, you're cutting out again. Well, it looks like a good start for the first meeting. Sorry, let's just wait a little bit. Let's see. Probably Emmanuel is gonna join back. Okay, so all right, good. So what I'll do instead, just while we're waiting for Emmanuel, I think Emmanuel is probably just gonna join from there. Oh, wait a second. Okay. Okay, yeah, so what I'll do, yeah, it looks like Emmanuel has like just a little issue with his connection, something. So what I'll do is I'll probably just go over like brief, like super introduction, just like first of all, like the main things that we need to understand with cryptocurrencies. And what I'll do, I'll just go like about the history of it and just talking a little bit about like the Bitcoin, how it was created and all of that. I'll see during this time, Emmanuel is going to be able to come back. So let me just do that here. Okay. Okay, good. So hopefully everyone can see my screen now. And the first thing, I'm just gonna like talk to you about something super simple, which is the Bitcoin. And the reason why I want to talk about the Bitcoin is just because we cannot really talk about like anything related to cryptocurrencies without having an understanding of what's the Bitcoin. And basically, it's the first cryptocurrencies that was ever created. And what we mean by cryptocurrency, it just says it in the world in the word itself, right? So crypto, so basically everything, the currency that is created online, right? So where instead of exchanging money as we know, we exchange bits of like data, right? So that's why everything is virtual and everything is, as we can say, somewhere in the cloud. So
Right?
brief history of, yeah, Emmanuel?
I'm back now.
Okay.
I'm still dealing with my computer, but I'm gonna use my phone for now. Yeah.
Okay, that's good. I was actually just like giving a super brief introduction of the Bitcoin, and after you can take it from there if that's fine.
Perfect.
Yeah, so I was just basically just going over that. So why it was created, something super important. So we know in a few years ago, like I would say many years ago now, right? So more than 10 years ago, there was a major crash with the related to the banks printing a lot of money, right? So we know that the money used to be backed by gold in the US and in different countries as well. So I think around 1960, what happened is that many countries moved out of the gold standard, so having their money backed by gold. And what was created after is the fact that basically the banks were only able to print money as much as they want and distribute it to people. The only thing that is it's creating kind of an issue because once you print a lot of money and it's not backed by anything, then there is no limit into what you can get, right? So it's kind of like creating a debt that is always bigger and bigger. So someone that we don't actually know, we don't actually know the real person, but someone created a system just to go over that. And the system was based on a technology that we call the blockchain. And the purpose of you don't really have to know like understand what is the blockchain. It's a technology. It's purely like computer science stuff. But what this technology allowed people to do is to share money across the internet, peer to peer. So like if I want to send money to Emmanuel, I can send money to Emmanuel at any time without having any third party. So without going to a bank, without going to the government, without going to anything. So that's why, first of all, the Bitcoin was created, and some people started using that to transfer value. And all of the cryptocurrencies after goes with adoption. Emmanuel is probably going to talk a bit more about it, but that's kind of like the origin of it. And from there, other cryptocurrencies were created. So, Emmanuel,
Yeah.
hopefully everything is good for you now.
Yeah, hopefully it's gonna stay a little bit stable like this now. Um, yeah. So yeah, as Bryce just said, basically the idea at the beginning was the fact that there is an unlimited number of money that can be printed by the government, and people were just worried about the fact that inflation will continue running out. Inflation will continue coming up, and there isn't a lot that people are doing in terms of limiting that. And like especially when the government detached the Federal Reserve detached money that is being printed from the amount of gold that is on the market, or the amount of gold that is available. So basically, somebody came up and they built this cryptocurrency, or this digital currency, which is limited in terms of how many of them can exist on the market. And right now, the limit is 21 million. So there is only 21 million Bitcoin that can be minted, or that can be minted. Yeah. And by limiting that, they're like, now we know there is only a certain amount of this particular crypto, or this particular currency that can be minted. All we need now is to increase the value of it, and then we can store our money into this, because of the issue that they had, or the issue that was existing, because there was an unlimited number of money that could be printed. Now, with that being said, we don't know exactly who was the founder, the original founder. People say it's Satoshi Nakamoto. However, that is considered like a Don Joe name. Like nobody knows that actual person. So yeah, basically that is how cryptocurrency started. And the idea behind it now was got to a point where after creating that Bitcoin, which is like a storage of money, they found out that in the process of creating that, they created something else which was bigger than what Bitcoin is, and that being the blockchain. And what the blockchain is just actually a digital ledger that is online, or that's to which everyone has access to, and it records transactions of a certain value. So, like for example, if you are like, for those who know like Excel and stuff, every time you sell something, you buy something, or you go to a bank, you deposit your money or debit your money from your account, they have a ledger where they write all of those transactions, but only the bank has access to that. Now, a blockchain is a digital ledger to where everybody who has access to that blockchain, because it is actually public, can definitely see those transactions, and that ledger or those transactions are recorded, and no one can change them without the previous transactions being verified, and they're being verified in a decentralized manner. So the big problem was the fact that when you're doing transaction with a bank, for example, if the bank does a mistake, they can if the bank does a mistake, or if the bank is attacked, they can lose the record of all the previous transactions because they were attacked and their database was breached, or their data was breached. Then they can lose the past transaction, and the ain't gonna be so much, like nobody has so much control over that. But with a digital ledger, which is the blockchain, it is a ledger that is in the cloud, to which everyone has access to, and it is automatically decentralized, so that the data is secured, and the data is actually more than, like, it's actually secure and a little bit harder to break or to breach. And the fact that everyone has access to it, it makes it a little bit easier, and it solves a lot of problems, actually, in terms of the way that the financial industry was working before. So now, with that being said, when they found the blockchain, now there are other things that are coming or that are being built on top of the blockchain. And those companies that are being built on top of the blockchain are now companies that are using cryptocurrencies. So companies that are built on the blockchain, they're now using their own digital currencies to make themselves, like, as a way of payment for themselves and for their users. So now, one thing that you're gonna, like, one of the definition of a cryptocurrency is a digital currency that is decentralized, where the transactions are recorded on a digital ledger, or what we call a blockchain. And most of the time, the blockchain is going to be decentralized. So for one of the example of that is Ethereum, for example. When you use Ethereum, every transaction that you do is recorded on the Ethereum blockchain, and anyone who has access to the Ethereum blockchain, or who has access to your address or your wallet, not access, but if they have the address itself, they can just go on the Ethereum blockchain, look for that address, and they can see all the transactions that you have made since the creation of that wallet, and how much money is there, where the money is going, where the money came from, and so on and so forth. Now, after that, the second or the third level of that is what we call a token. Now, what a token is like, it's actually just another company that is using a digital currency on top of an existing blockchain. So an example of this would be something like, we can even use example like before Matic or Polygon. Nowadays, Polygon have their own. They have their own like a second layer of the blockchain. But Polygon, for example, it is a token that is built on the Ethereum blockchain. So when you do transaction of Matic or Polygon, those transactions can be seen on the Ethereum blockchain, and they're not necessarily on the Matic or Matic blockchain. There is no blockchain for Matic, but there is a blockchain for Ethereum. And when you do transaction of Matic, they are seen on the Ethereum blockchain. Yes. Can you share your screen, Bryce? I'm just gonna use your screen for now.
Mm.
Then,
Yeah, that's good.
perfect.
Mm. Yeah,
All
I'm
right.
sharing my screen right now. So,
Yeah, perfect.
mm.
So now, what a question that we can ask ourselves right now is how can I invest in crypto? Now, there are plenty, or there are different ways that you can invest in crypto, but basically, depending on your investment goal or your investment strategy, you can know how to position yourself to make a better investment decisions, and of course, making better strategies. So, but one of the strategies, or one of the ways that I would tell everyone to look into this, is definitely by looking at the long term first of all, and of course the looking at the technology behind it rather than just the hype. And what do I mean by that? What I mean there is that if you look at the technology behind it, you will be a little bit more positive about where the market is going and what is going to come in the future, and how sustainable this business model is. Talking about like a particular crypto that you're looking at, rather than looking at the hype. If you look at the hype, you're going to see stuff like Dogecoin or Shiba. Those are tokens that are just they're just there for the hype, and everybody puts their money in it. As soon as it gets to like a certain amount, everybody has like most of the people who got in early have made their profit. They're gonna get out, and the token gonna it's gonna dump. And if you bought it at the top, you don't wanna hold on to something that is dumping and dumping like a falling knife. But rather, if you look at the technology behind it, then you can see something that is gonna be sustainable. And another reason of that is also something that you should not forget is we saw this kind of hype, or this kind of movement again in 2017, where Bitcoin went to like 20,000 and then it dumped back to like 3,000. And what happened with that move is that many of those little projects, or those little tokens, they actually disappeared after that. And the reason why was because they didn't have any sustainable business model behind them, and it was just a hype going around it. Because of the hype of the whole crypto and Bitcoin, they also gained in value, but then after that they disappeared, and the people who actually invested in them, they lost their money. Now, if you look at some of the previous or the original project that were there, and they actually went through that like negative cycle, or that downtime, they're actually still there today. And people who held on to them, they're actually in profit right now. So projects like Matic, Ethereum, Cardano, and stuff like that. The reason why those are still here today is because they had a sustainable business model. They had a sustainable product that that is actually needed, and it is currently it's even in use right now, and that's why they're still here. So that is also the other way that you can look at it right now, because right now we are into a pretty strong bull market, and this is something that will never last forever. At some point it's going to end, and when it ends, you need to be ready to like either by getting out before, or know what you are holding on to.
So just one thing, Emmanuel, there is actually one really good question from Morgan. So sorry to interrupt.
Yeah.
And basically, Morgan is asking, what platform do you use and what crypto do you invest in and why? So I basically know that just before, actually, there was an issue with the connection. You were going to CoinMarketCap, and
Yeah.
that's what I'm going to show right now. So like, I know that CoinMarketCap, it's something that a lot of crypto investors are using just to watch crypto. And I would be curious, like just also like a bit related to what Morgan is asking. Like, how do you pick one basically? Like, because there is so many cryptos, so many projects. Like, how do you basically just decide which one you should invest in?
Yeah. So basically, I definitely go to CoinMarketCap, for example, and CoinGecko, and before doing any research, I I look into the trend first of all, like what is going on right now. For example, right now we know that one of the things that are going on are the metaverse. So I'm gonna look. If you go on
So let's say
CoinMarketCap,
I can click on metaverse here, right?
uh, yeah, exactly. Click on
Mm-hmm.
metaverse.
Okay, I see. Mm-hmm.
Yeah. So when you click there, it's gonna show you all the metaverse projects or cryptos that, like all the crypto that are related in the metaverse, that are working in the metaverse. And then from there, you can pick one. You're gonna do a little bit more digging. So, for example, one of the other way that I look into the market, I look for something that is not, like for example, when you want to be conservative, if you want to put a lot of money into this, you want to go with where the money is first. So you're gonna go with the big one, for example, the top one there, which is Mana.
Yeah, so let's say the top one is mana, right? So
Yeah,
like so first of all, like let's say right, all right, so now we see we have the price, right, at $3. Is it good, bad? Is it something that we should actually consider? And
yeah,
like I know that you talked a little bit about the supply as well, so it would be great just to understand like what does that mean, right?
yeah. Yeah, so the reason why I want to go first of all with the big one is because those big ones are not going to be easily like the price is not going to be very volatile when there is a higher market cap. So like Mana, for example, we're going to see it's already in the billions, which is good. For it to lose 50%, it has to lose about like half of that $1 billion in it, half of the market cap for it to lose 50%. So you don't want to lose, like you don't want to buy into something that's gonna
So,
lose at
hmm.
50% in a few days.
So sorry, so you said for instance like the market cap right now it's at 5.6 million, right? Billion, right?
Million, billion, billion, right?
No, billion. Yeah, exactly. So you
Yeah.
said that basically based on that, you know if the price is going to change, right? So that tells you how the price is going to change, right?
That tells me, yeah, the price is not gonna be very volatile, first of all.
Hmm.
The price is not gonna be very volatile, and especially negatively. I don't want it to be negatively volatile against me. But it can
Okay.
be, yeah, it can be positively volatile depending on the trend. But yeah, you don't want it to be very negatively volatile towards you. And then after that, you look at the past, of course. Like where has the price been so far? Like you don't want to buy something when it has done like 100x in the last 2 months or so, you know.
Hmm.
If it just finished to do like a 100x 100 or 10x in the last 2 months, then it's probably at the top and it's gonna dip. So you don't want to buy that at that point, but rather wait for a pullback.
Hmm. So for instance, right now I have the price of Mana. So like just looking at Coin Market Cap, clicking on Mana, I see all of those info. And basically at this point I have the price, right? So
Yeah.
should I like how should I actually like look at it, right? So right now I can put like a month and I
Mhm.
see, sorry, if I'm putting the year, I can see like all the months since last January,
Yeah.
right? So is it still a good opportunity and like based on what you can say that it's good or bad?
Okay. So right now, for example, I can't see the screen properly, but from what I can see, uh, at least first of all, we noticed that it did have a pump, but it just had a pretty strong correction. I think that's about 50%. Can you check? Like
This
from the
one
very top to where it is right now?
from the total, can I check on?
From the
On
very top,
market
yeah,
cap?
yeah. Like how much was the very top?
This one at $4.3
Okay, and now it's at
at 2.9.
okay, yeah. So yeah, that's usually, so most of the time actually you're gonna see the price, it usually goes really strong, and then a minimum that's gonna lose, it's gonna lose a minimum of 50% of the top where it was at. After that, then you can start loading a little bit of that token. After it has recovered or do a correction of about 50%, then we can start loading, depending on the trend, how the market is still going. So like if you're still believing into like that particular token to still go higher, and like for example right now I believe the the metaverse is still strong and there is still more that is coming into the metaverse. So I'm still a little bit, I'm still bullish into the metaverse. So looking at that, it has already recovered about, it has already done 50% correction. I can start loading a little bit. And then when you
Mhm.
get into it, you don't go all in on the very first trade, but you start buying slowly, because if it keeps dipping, then you can even get more at a cheaper price. So you don't go all in at the beginning, but you go slowly.
So just one thing, just related to that, because like for instance, you talk about the metaverse. At the same time, we know that it's a new industry, and we know that like new industry means also like a lot of competition, a lot of new companies starting. We don't know actually, right? So I'm looking at a lot of them, and we don't know actually like which one we should invest in, right? So
Yeah.
for instance, if I would like to go like really conservative, and let's say I'm looking to invest into like cryptocurrencies, maybe more on the long term, so like maybe for the next year or something, I just want to hold a cryptocurrency and not go into something that is not too risky. How would you go about that?
Yeah. Um, so just returning to that, um, when you are there, another thing that you can actually do, first of all, to to kind of filter from all those cryptos, is you can go to coin market calendar. What this website is, it tells you about different news that are coming up about different cryptos.
Hmm.
So when you go there, you're gonna look for some of those cryptos that you see that are into the metaverse, and you're gonna see, like, if for example there is one that is soon gonna be listed on a big exchange, or there is one
Hmm.
that is soon gonna have a burn. They're gonna have like a new EP15 implemented in their contract or something like that. If there is a significant news that is coming up about one of those projects, then
Hmm.
you know that like people trade the speculation and then they sell the news. So you're gonna prepare for that. When that thing or that feature gonna go live, it's gonna attract a lot of interest into that particular crypto. And
Hmm.
when that happens, the price will usually go up a little or a little bit more. So you can
Hmm.
prepare that by looking at that website. You can prepare and look for some of the cryptos that are having news that are coming soon, and you can start preparing to invest into those.
Hmm.
Now,
Okay.
in terms of your investment strategy, like if you are conservative and how you can allocate your fund into that. First of all, one thing that I can say is that crypto is still pretty new and is very, very volatile and also risky. In terms of allocation of fund, I would say uh, if you are conservative, go with maybe 1% to 5% of your fund. Don't go all in into crypto. Uh, I wouldn't really recommend that. And the reason why is because, first of all, you don't really need so much to make a lot of money in crypto. because some of these projects, when you get in early, they do like 100x, they do like 10x in less than a year, and you don't really need to expose all your fund at the risk of losing them for you to make money or for you to be profitable. But rather, by just taking a little bit and having a small exposure to it, and accumulate them while they're cheap, and just hold on onto them, when they're gonna grow, you will be very remunerated for, or very rewarded for, the small investment that you did into that. So I would say, first of all, in terms of allocation, don't go too heavy. Go 1% to 5% maximum into crypto. Then with that 1%, you can choose. You can put 50%, keep the 50% into the big ones. So like those ones that are not very volatile, Ethereum, Polkadot, Cardano, and stuff like that. And then the small one, like the 50% left, you're gonna start investing into the small companies now, the small project. And when you go into those, you also don't want to go like all the 50% into one project. No, but rather go look at it in this way. Let's say, for example, you have $1,000. You put $100 into 10 projects. If 9 of those projects go wrong and one of them goes really well and makes like if one of them makes like 100x, if only one of them makes 100x, it will automatically recover the loss from the nine other one that went wrong, and you will also be profitable. So
There is
the best way of looking at it.
there is like a lot of questions in the chat, so I'm just gonna go over some of them. There is one, just I know a lot of people have heard about Shiba, and there is Doge. Now there is another one that is Elon. And is it still a good idea to invest in those projects, or?
Into Shiba or Elon?
Both of them, if you can, if you know both, it would be great to know what do you think about those.
Okay. So first of all, Shiba Inu, one thing that I like about Shiba Inu is that, of course, it started as a meme coin, but right now they're having some utility behind it in a way that they have they have the Shiba swap, they have different services that they're offering to other meme coins, and that is making it a little bit more sustainable in a way that there is money going into the company itself, and hopefully the company is going to do a good use of it by doing more marketing. But also it has had a pretty strong pullback, which is something that I like. Shiba Inu went pretty high, but recently had a strong pullback. I would say right now is a good time to start buying some Shiba. When it comes to Elon, right? Not Doge Elon.
I think Doge Elon is the sign of Doge Elon. Yeah.
Yeah. So yeah, when it comes to Doge Elon, I'm not very familiar with this one, but to me it looks more of a meme coin. Give me just a second, sorry.
Yeah, I personally, I have some Elon. I invested in Elon a while back, sometime last year. But personally, what I would say with those meme coins too is just to be super careful, because I find that sometimes the opportunity is like really early, but at the end, is it really sustainable? We don't know. I would say it's a risk, but as Emmanuel was saying earlier, it's always great because if you invest a small part of your portfolio, you can have a super high return. But otherwise, if you lose it, well, you lose a middle part of your portfolio, right? So it shouldn't like impact you too much if it goes wrong.
Yeah.
Mm.
Also going back into this again, you need to understand when you want to invest into these meme coins, you definitely need to understand that some of these, like Dogelon, I just went into their website, they literally don't have anything. So it's like gambling. It's like literally like playing the lottery, where you're like, I buy this and I'm losing this money. Just know that you have lost that money. And if one day it goes to where you are hoping it to go, then yes. But if not, so this is the way you should look into it. Meme coins are literally meme coin, nothing else other than just making noise.
Mm.
And talking about meme coins, one of the meme coins that I would actually like vote for a little bit is Bezos Earth. This one, they're actually into the metaverse and the gaming. So it will really depend on how good the company is in order for it to be like really profitable. But it did a pretty strong pump recently in the last few months, and hopefully we're gonna see something like that again.
Hmm.
Yeah.
Okay, that's good. So now, like, just to know, I saw some questions related to wallets because we talk about a lot about cryptocurrencies, wallets. We also hear a lot of bad things, to be honest, about cryptocurrencies, that it's risky. People are winning money, but a lot of people are also losing. It
Yeah.
looks like there is a lot of mistakes we can do. So some people were asking just some questions about wallets and platforms. Is there maybe like one or two you can suggest, like if someone wants to start, like the first place they should stop just to start looking at cryptocurrencies?
Yeah. So yeah, basically the first one of the biggest exchanges where you can buy crypto is Binance. I'm not sure about I'm not sure where everyone is from in the call right now, but Binance is available in Canada, and there is also Binance US. Another one of the biggest apps is also crypto.com. That is also another app that I use a lot for
Hmm.
to purchase my cryptos.
Hmm.
Now, that
There,
is one
there,
of the, yeah,
sorry,
that
there is
is,
a quick question from Michael.
hmm? Yeah, go ahead,
Michael, you
Michael.
can turn on your microphone. Your microphone, you're muted, Michael.
Thanks. Yeah, it looks like somebody else kind of jumped on it too. I just wanted to add something there quickly. That if you're in Ontario, that Binance hasn't met the regulatory code for the SEC, for the equivalent of SEC. So I would, if you're in Ontario, I would avoid Binance at this point. They've got a lot of regulatory issues.
Hmm. Okay. So yeah, that's what I've heard too from people in Ontario. Not sure if they can use Binance.
Oh yeah,
Good point.
Yeah.
yeah, that's true actually. Binance has been banned in Ontario, but there is
Mhm.
also Bybit. Bybit is also good, and Bitmart, I believe it is available to Ontarian,
Mm.
and Crypto.com it is also.
Okay.
Yeah, and on
There is
Crypto.com
another
you buy with a credit card too, which is good.
there is another question from T. T, you raise your hand. You can turn on your microphone.
Hello, can you hear me?
Yeah, that's good.
So I wanted to know when it comes to um, just kind of setting up the wallet. So I have Binance too, and I hadn't used it for months. So I'm trying to get back in and get my password reset, and it's been a bit of a nightmare. So you were saying that there were Binance alternatives, but when it comes to um, wallets that are kind of accepted on multiple platforms, like I mentioned it earlier, but I know you're not covering it for NFTs. It's called Open Space or Open Cell, and then also ones that are actually compatible with the metaverse? I'm still very, very new to this. Is there one wallet that just kind of is a one size fits all? Would that just be crypto.com?
Yeah. So basically, what you do is this platform that I just talked about are platforms where you go buy crypto, especially like those big one, Ethereum and Bitcoin. And those are considered as centralized exchanges. Now, when you buy a crypto from a centralized exchange, the crypto that you just bought is still within their hands. So which means if they close your account right now, you don't have access to those crypto. But what you can do now is withdraw those crypto and send it to your wallet. So a wallet is like your MetaMask wallet is different than the wallet at Binance. And MetaMask is one of the most used wallets when you are navigating on the internet. It's easily accessible from your computer to interact with different other websites. So I would say if you are very active, you can use MetaMask, have the Chrome extension, and have the app on your phone. So what you do is you buy your token on Binance, for example, and then you withdraw them and send them to your wallet, which is MetaMask. You can also use Trust Wallet. You can also use there is another one, but yeah, MetaMask and Trust Wallet are one of the two of the most popular ones. And
Okay,
yeah.
Thank you. And I just had one other question. So if we have follow-up questions, I'm not sure if you're going to cover this later, but is there a way that we can contact you directly?
Yes, I'm not sure if you are into our Telegram group, but yes, you can reach out to me in the Telegram group, or you can just drop your question in the group, and me or another one can definitely answer the question.
Yeah, I'll share some links at the end as well. So
yeah.
Mhm.
Yeah, also another thing I like that she mentioned, I believe you were talking about OpenC. What OpenC is actually just like a marketplace for NFTs, which is also another pretty huge thing in crypto. And on OpenC, you can buy different NFTs. And yeah, so let me just make sure.
And I'm guessing there's going to be a class on that in the future at some point.
Oh yes, we have. Yeah, we're planning to have different session about NFTs too.
Okay, thank you.
No problem. Also, just talking about crypto too, I'm not sure about some of you who are into the traditional investment, like the traditional way of investing in a way that you go and buy NFT, not NFT, but like ETFs and stocks. But another way that you can have an exposure to crypto is, of course, by investing into ETFs that have exposure to crypto, or companies that have exposure to crypto.
Hey, I have a question on that. What are the advantages of advantages/disadvantages of, say, investing in ETF versus actually buying the currency?
Sure. So an ETF normally is like normally it's like a company, or like, yeah, it's usually like a company investment firm that is buying those different cryptos and build them into one bundle, and then they give you exposure to that bundle. So like this will be a way for you to like hedge your investment in a way that, let's say, for example, Bitcoin is going up, but Ethereum is going down. Now, if there is an ETF that has an exposure to all the crypto industry, then it will be a little bit hedged in a way that your your investment won't go down automatically because Bitcoin is going down, but it's just gonna go a little bit in a little bit less down than the actual market. Now, if you buy into an ETF that is only for Bitcoin, then it's actually kind of mimicking the pattern or the route of Bitcoin. But this is not necessarily exactly the same movement of Bitcoin, because it's more of the traditional way, in a way that the company already buys it and they know they have it, but it also depends on how many people are buying that ETF too, you know? So people can be buying the crypto or they're buying the Bitcoin, but they're not buying that ETF. And for that ETF to increase in value, people have to be buying into it. But of course, if you bought the ETF and you and let's say, for example, it pays into dividends and stuff like that, then because the value of Bitcoin, which is the underlying product of that ETF, has grown in value, then you're probably going to have a lot of dividends paid to you at the end of the month or the quarter.
Got it. Thanks. And is there any tax implication when you're kind of liquidating it in the two instances?
I wouldn't say there is really.
I can handle that one.
Yeah.
I'll handle that one. Yeah. Awesome. So essentially, right, when you're selling cryptocurrency, it's going to work the way, when we're doing stock. So what you basically want to keep in mind is that you're either income or you only want to pay.
So I can't hear you. Sorry, I don't know if it's just me, but I'm not able to hear you.
Yeah, we cannot hear you well, Michael.
Oh yeah. Okay. All right. Is that better? Maybe
Yeah,
I think I was holding the phone the wrong way.
Oh yeah, that's good.
So yeah, awesome, cool. So yeah, so basically, right, whenever you're selling your cryptocurrency, right, it is with stock, right? So what it is called a deemed disposition, right? So basically that means at that point you're going to be responsible to pay any taxes on any gains that you made. So how it gets taxed as either income, right, or it gets taxed as a capital gain. And what a capital gains tax means is you only pay tax at your marginal tax rate, whatever your income tax rate is, on half of your profits, right? If you buy it for $100, you sell it for $200, or if you spend it on a credit card, right? This is where the tax situation is a little tricky to track. You know what I mean? Basically, a lot of big words. But you got to keep a record of your cost acquisition. And all that means, right? So if you buy some for 25, you buy some for 25, you buy some more at 50, what's your price paid, right? Let's say your average price paid is $100, right? So you bought some at 100, you bought at 50, you bought some at 200, you know what I mean? So your average price per token is about $200, right? If you sell it for $200, you're liable for $100 capital gain profit that you made, right? So does that answer your question? So, and then the benefit to get an ETF, right? An exchange traded fund, the idea there is that, it's going to be eligible to be held in registered account, which means that your crypto's going to be able to accumulate tax-free, right? So you don't have to worry about the deemed disposition, right? Just, what happens when you sell, right? We got to declare the profit or the loss.
Yeah.
Michael, you're breaking up on and off, on and off. It's really difficult to understand you.
Sorry. Yeah, sorry. Maybe my headset. Not sure if I fixed it, but I'll turn it back to Linda and Bryce.
Yeah. Yeah. Let me just.
Sorry. So basically, if I have this correct, we essentially treat when we have to pay for it, treat it like you're taking money out of your RSP, for example. If you try to withdraw the money from the RSP, you have to pay however much to the government.
Mm-hmm. Yeah.
Right. So the idea there is that here's what traders don't think about too. Is they don't think about tax efficiency, right? Which means that every time you buy or sell, you've got to if you're at a loss, you know what I mean? Then obviously there's no tax payable, right? But if you sell something at a profit, then then you're going to be taxed on your gain, right? So that's another thing you guys really want to think about when you're holding cryptocurrency is that you don't want to be in and out of the position all the time. You know what I mean? So if you hold something indefinitely, a year, 2 years, 5 years, you're not responsible to pay any taxes on the gains that you made until you sell. That's the default position, right? It can either be a sale, it can be giving sorry, Dad. Sorry, I don't know what to do about that. But yeah, so basically hang on to your crypto, you know what I mean? And you don't have to pay taxes. When you sell, you're there.
So sorry to interrupt. Yeah, Michael, sorry, it looks like you're cutting out a bit more. But yeah, thanks, Latoya, for also sharing the link. It's the link from the government of Canada. If you're outside of Canada, I would encourage to look at that in your country because it's always different. So there is a lot of information about it. There is a question from Sarah. You can turn on your microphone. It looks like, Sarah, we cannot hear you. And I would think that your microphone is an issue. But yeah, we can keep going, Emmanuel. Sorry.
Yeah, I would just actually recap on that, what Michael was talking about. This is actually something important to know, which is the fact that, of course, at the big, like some of the reason why people are also very interested into crypto is they're trying to also kind of escape the tax in a way that if you are holding your crypto in your wallet, the government doesn't necessarily have access to that wallet and they don't know who's the owner of that wallet, which means you can earn as much as you want into that wallet, but nobody's going to be knocking on your door and asking you to pay an income tax on that. Rather than when you are going into an ETF, for example, the ETF, you have to buy it from the traditional market. And when you go to like an exchange like Questrade, or you go to your bank to buy an ETF, they have collection and record of all the transactions that you're going to do, and they will report it to the government. If you made some profit, the government will have a report of that, and it'll be like, hey, this year you made so much, you need to pay your tax. And capital gain in investment is 50%. That's why you need to also consider that when you go into, if you're choosing to buying an ETF or buying the actual crypto. So yeah,
that's pretty good. It's actually like most of the time we had. I just want to make sure if anyone has just a question or something, you can turn on your microphone if you want to ask it directly. Okay, you can also write it in the chat if you want. So that's good. So what I'll do, oh, sorry, there is one question. Actually, Sarah had a question. Yeah, so basically, Sarah is asking, I'm required to track my buying and selling, or will I be able to get those details from the exchange I use? That normally on most of the exchanges, you can get the history of what you get. So I'm not sure exactly if they're going to tell you the profit. So some of them you might have to calculate it, looking at the price that you bought, the price that you sold. So I would say there is probably some calculations that you might have to do depending on the exchange. That also goes with like if you invest into stocks or something, depending on your broker, they might give you some information. Otherwise, you might have to calculate it. But at the end, you're taxed on capital gains. So that's why you just need to look at your profit per transactions.
Yeah.
Mm-hmm.
Yeah, it's also depending on what you're trading. Like for example, if you go into day trading and trading on leverage, for example, of course you're gonna see how much you are making as you're making it and how much you're losing as you're losing it. But when you buy on spot, which is like buy and hold, the exchanges are not going to tell you exactly what is your profit so far. You will just see the numbers. Like today, your account is valued, let's say, $2,000, and then tomorrow it's going to tell you $2,002 or so on. So you're going to need to track it and see which one actually gained.
And that also, it's also important because once you start investing into crypto, to go with big platforms most of the time, because if you want to have like good tracking of your transactions, you want help, support, anything like people that you can call if you have issues, if you want to like know about your taxes, it's good to go with big platforms like we talked about, like Binance, Coinbase, and all of those big ones, and try to avoid the small ones because sometimes you might have some informations missing, like those ones. I think there is one question from Marinella. If you can turn on your microphone.
Yeah, hi, thank you. I went on Coinbase and I just for fun, I just bought like during Christmas, I bought like $100 worth different stuff, you know. And I've watched it go down and I've watched it go up. And now it just like boomed all the way up. And like I'm going, whoa. But if I had invested like $5,000, would that have been substantial enough for me to cash out some money? Because I put in just 100, you know, and all the different stuff. And I got like almost, you know, $15. But if I had put in 5,000, for example, I would have definitely gotten a lot more, right?
Yeah, exactly.
And then I could cash out that amount above the. Is that the way you're making money on this?
Yeah, exactly. So like right now you purchased, maybe I would assume you purchased one cryptocurrency with $100, and now the price of the value of your investment is now at $115. So if you want, you can see it like if you sell your investment and you cash out, now you make $15 if you cash out.
So you're not recommending, I'm sorry, Bryce, you're not recommending purchasing different stuff, because I just had fun with it. I like sushi, so I bought some sushi. I like, you know what I mean? I have a cat by the name of Luna, so I bought some Luna. But I'm just having fun with it, just to get familiar with it. You know, this is just to get familiar with it.
Yeah.
So you're recommending to just do one?
Not necessarily. So what I would recommend is, first of all, I would say it's a bit risky to go by the name. Like you actually took great projects, like you took Sushi Swap and Luna, that are actually two great projects. But I would say that if you go with a crypto, it's always good to diversify. So if you can pick maybe two or three, and just to look at least at what they are doing. So sometimes it can help you know how much you should put based on what you have, right? So if you have $100, you can put maybe 15 to one, 15 to the other one. And especially once they are strong projects. And what I mean by strong is just projects that you can, just looking at their website, you see that they have a big team. You can look at their social media, see a lot of people are involved, real people are involved. And then that's a good start, I would say.
Okay. Somebody recommended TradingView just to download that. Is that for crypto?
Yeah, TradingView, I'm gonna show it to you right now. So TradingView allows you to see a lot of different type of investments. So you can look at cryptocurrencies, you can look at stocks, ETFs, you can look at just different types of investment. And it's really to view the price of anything that you want to invest in. Like for instance, right now I have the Bitcoin price, and it just shows you pretty much how it is, and it gives you a good idea. People always say buy when the price is low, sell when it's high. So at least just looking at the chart like this, you can see that the price has been dropping. So maybe looking at opportunities to go to buy. We're probably going to go more into a technical analysis and how to look at charts in other meetings. But TradingView is definitely a good one. It's one that I use and I know a lot of people use as well.
Thank you so much. Thank you for holding this too. It's very informative.
Yeah. All right. Thanks for joining. Any other questions?
Those I don't know if you went over the analysis of Ethereum. There was somebody who was asking about like a perspective on Ethereum right now. And,
Yeah, I can go over it. Ethereum, let's use this one. Okay, so yeah, Ethereum. Honestly, I feel that I'm not sure. I feel that we're trending right now. So right now I'm on the weekly chart, and I don't know. Maybe it's the beginning of not really the beginning at this point, but still maybe it's a trend, right? So what I did, I just draw this line, connected some bottoms because that's how we find trend lines. We always see that the price tend to bounce at this point, right? So right now I'm on the weekly chart. So looking at every bar, it's represent a week. And what I'm doing after, I'm just zooming in to see how it is, looking at the daily chart. So now every bar represents a day. And it looks like, yeah, it's bouncing on this line. It looks like it's a good place where I would buy. I find that we should be a bit scared if the price breaks this line. So if it goes under that, right? So if it goes like around this area, then we might be a bit more careful and just I would say maybe just wait a little bit and see how it goes. But just looking at it really on the technical side, so I didn't really look at the fundamentals of Ethereum. Maybe Emmanuel, if you want to add something.
yeah, there was actually an implementation of the EIP 1550 in Ethereum recently, which is like the process of burning some of the Ethereum that they're getting from the fees. And that is actually a pretty positive thing for Ethereum, to be honest. And I can share the website later, but you can look at the number of Ethereum that are being burnt every day, every single day. The number is pretty high, even compared to the number of Ethereum that are being minted per day. So we are burning more Ethereum than the number of Ethereum that are being minted right now. So yeah, consider like putting that in consideration. It's a pretty bullish information or a pretty bullish update that was done on Ethereum. And depending on the trend and how we continue, I'm a little bit still bullish on Ethereum, to be honest. Can you just look at the chart for Ethereum and Bitcoin, please? So looking at this chart, I would see that there was like there was like that rectangular or kind of a resistance in between there where Ethereum was trying to leave or break out of Bitcoin, but out of that resistance level. And now it's a little bit back into that area. So as long as we are still in this area, I would be a little bit more like a little bit more conservative because it's not so bullish. But once we break this area, depending on where the market goes, there is a possibility for it to go back again down where the arrow is, or at least in the middle of that area. After that, when we break this area and stay above of that area, I would be a little bit more bullish again on Ethereum. So to me, the way I look at the market is definitely in terms of rhythm, you look at the rhythm and look at what the market is doing in terms of technical analysis. So most of the time, you're gonna see it moving in a range. It's either gonna be like in a range and what you call a consolidation, or in an uptrend or in a downtrend. Yeah. Now, right now, in that range. So what we're just waiting for is either for it to break out of that range and go higher, or break and go down. So depending on what's gonna come after that breakout, then we can be very confident about our position in Ethereum.
Yeah. Michael, you have a question or a comment?
Yeah, I'll just quickly ask a question that popped up. Is by what DCA is, just means dollar cost averaging, and that just means putting in a regular amount each week or each month or whatever on an ongoing basis, right? I wrote an article on that recently, but it's a way to just make steady contributions. That's all. But yeah, I just want to give a real quick on the chart, to be honest. I think right now we're basically trading at about $40,000 on Bitcoin, and I think as long as we hold the $40,000 mark, we can expect to go up this year. Personally, I think we're going to break down this year. I think we're looking at 35, 30, even $25,000 for Bitcoin. I think we've had a phenomenal run up, and we just naturally need to retrace. And I think the important thing that people really want to understand is that correlation is, really important, which just means that everything kind of relates to what Bitcoin does, right? So right now, like Tanda was saying earlier, you want to be in these large market caps, right, that don't have a lot of volatility in them. You want to stay away from meme coins. You want to stay away from these micro caps or these really small, you know what I mean, coins that pump hard, because there's not a lot of liquidity in them, because they're not worth very much, right? Everybody's chasing those, trying to get rich, and they get burned, right? But yeah, again, this year, I think we need to remember that things work in cycles. There's a 4-year halving cycle with Bitcoin, and I think this year last year we had a phenomenal run, and if we lose the $40,000 mark, there's going to be a lot more downside to come.
Yeah, totally.
The gains that you get when it's halving. I'll let you guys answer that.
No, you can go.
Yeah. Okay. Cool. So basically, what halving is, right? It's like every 4 years they reduce the amount of Bitcoin that's being issued, the rate at which it's being issued. So the mining block gets more difficult. And what does that mean? It means that so many Bitcoins get issued per every terawatt of energy or whatever, right? So as the bit block gets to be more difficult, the amount of coins available to be mined or minted becomes less. And this is why what you need to understand about Bitcoin is that its price is going to go up indefinitely forever, because there's a finite supply, right? And we can't make any more of it. There's only ever going to be 21 million coins, right? Yeah, the hash rate is halved. It's harder to mine Bitcoin. Yeah, so less Bitcoin is mined, becomes even more rare. Exactly. So Bionic, that's great. That's a great point. So when it becomes more rare, right, things become more scarce. So if we look at gold, right, and what gold does, when the gold price goes up, miners just start producing more gold. They start more gold, so the price comes back down. But you can't do that with Bitcoin, because because the rate at which it can mine, it's set. You know what I mean? We can't go exploring for more gold. So there's a hard cap on that, and that's what the halving is. It's reducing that cap, and whenever that happens, the price shoots up, and that's what happened last year. We had a halving, and the price shot up. So after the price shoots up, what needs to happen? The price needs to come back. So I think, honestly, this year might break 100,000, but that's the wrong question to be asking. Right now, I'd be looking at how low can we go? Because, last year was an up year. The next 2 years are usually down. Things are starting to change, But honestly, with volatility in cryptocurrency, which is the price you pay for like insane returns, we can expect to go a lot lower than 40,000 this year.
Hmm. That's good. Yeah, thanks, Michael, for that. We're just gonna take two last questions. There is Sarah. You can turn on your microphone. Hopefully it's working now. Okay, looks like maybe Sarah is not here. And Bionic, you also have a question? Okay, yeah, maybe it's just an error. Okay, so yeah, okay, just one last one with the tax in terms of capital gains on crypto profit. If cashing out is the suggestion to cash and hold profits in your wallet for a period to pay minimal tax or avoid paying max or 50% of
Sorry,
your
can you hear me
profit?
now?
Yeah, that's good. Yeah.
Yeah, sorry about that. Yeah, I just wanted to address one quick thing real quick that Michael was saying. And I understand his views that Bitcoin might drop to 30, might drop to 25, what he's saying, and anything is possible. So that's one thing about the market, is that anything is possible. We could pump up to 100,000 within the next month or two, or we could drop back down all the way to 20,000. But I just want to say this: as we look at the whole crypto market, we realize that, hey, El Salvador has made Bitcoin its national currency. We see adoption in all facets. We see major institutions DCing into Bitcoin. We see that inflation today is, I don't know if you guys have been following it, but inflation all-time high is at 7%. And that's just what they tell us, okay? That's not to say what the price of goods actually is, okay? Used cars have gone up 30%. So, that 7% doesn't even really translate into what we're actually spending out of our pockets every month, okay? So Bitcoin, having said all that, Bitcoin, regardless if we go up to 100,000 tomorrow, if we dip down to 20,000, it is a finite amount of Bitcoin available. They're not making any more. You can't dig it up, like Michael said, like you can gold. And it is a hedge against inflation, okay? Not just for us in Canada and the United States, but countries like Venezuela, countries like El Salvador, countries whose national currencies are, useless, and they know it. They are all going to be adopting cryptocurrency in some form, fashion, or the other. So I really want to thank you guys for this. This is my first time here, and I'm just really enjoying it.
Yeah, thanks for joining. Okay, so
I'll just jump on that real fast. Yeah, Bionic, man, honestly, some great points there. So yeah, honestly, I think honestly, the inflation is yet to hit us, to be honest, and it's getting insane. In our lifetimes, we haven't really seen this stuff hit the way it did back in the 1970s, right? In 1971, Nixon took us off the gold standard. That's when we became a truly fiat currency, and that's Latin for by decree, which means it only has value because the powers that be say so. There's no intrinsic value in our currencies anymore. And countries like El Salvador are tired of it because all America exports is inflation. And this is the importance of having a hard currency. Something that can't be printed at just what causes inflation, right? What happens is, the analogy we want to think about with inflation is if you have soup, and you have some unexpected guests come over, you can add water to the soup or create more currency. You don't actually have more soup. You just have watered down soup. And when you water down the soup or the money supply, that makes the price of things in the real world go higher. And if you don't have your own currency like El Salvador and Paraguay, we're going to see many countries follow El Salvador's lead because they are tired of the Americans being the world reserve currency and manipulating the rules to their own benefit. This is the key reason why you guys need to be holding Bitcoin for the long term. And honestly, I think Bitcoin goes down this year. And the other thing is, that's a good thing. I mean, that's an opportunity for me. People look at volatility in cryptocurrency, and it scares them off. But the truth is, if you understand what it's doing and why it's doing it, and you realize that you're going to stay in a long course, the pullback opportunity to buy in cheaper, right? So don't see what happens realistically is retail or the uninformed buyers. I mean, they see the price shoot up and they buy these long green candles. And then they're the guys that want to get hold of the bag, they get burned, and then they give up. You know what I mean? You want to be buying when it's on the down. When you see the market's red, that's when you just want to start putting in more money. But if you can't figure out all that stuff, you know what I mean? Just dollar cost average. You put in $100 a month every week or every month or whatever it is. You keep doing that indefinitely. That's dollar cost averaging. And your price will work out to be, it's not going to outperform. You're not going to underperform either. Truthfully, I'm looking for a huge correction this year because honestly, that's why I want to back up the truck and buy everything I possibly can.
Yeah. Cool. So we're really over the time now. So thanks, Michael. I just see that GCB, you have something you want to say, maybe a comment or a question. You can turn on your mic.
Oh, yeah. So you able to hear me?
Yeah.
Okay. Yeah. Just wanted to know, I heard some terms of burning some coins or getting rid of coins. There's maybe some whales got a large amount and they getting rid of it. How does that fall into everything as far as making the coin stronger or what is that they're doing?
So I'll jump on that one. This one's pretty straightforward. So basically, right, the reason we get inflation, we get raising prices, like I was just talking about, is because the governments makes more dollars. The more dollars they make, the weaker these dollars get, right? Does that make sense? Adding like water to soup, now we just get watery. Does that make sense?
Yes.
Awesome. So basically, right, if I instead of putting water in, I take the water out, right, and I reduce it, does that make the soup more flavorful or more watered down?
Gotcha, more flavorful.
It'll make the soup more flavorful. So that's what burning coins is about. It's about taking the water out. It's about reducing the supply, which makes the token stronger. The American, the fiat currency system, they only ever add dollars. They never take dollars out of the system year over year, right? We think of money supply as something that's fixed. It's not. They can control how much money is in the system. They can increase it or decrease it, but they constantly increase it. That's why everything goes up in price. That's why the stock market continues to rise, even though it damn well shouldn't be. You know what I mean? So when you see token burn, what they're saying is that these coins are going to become more scarce and more valuable. So it's a good thing. It's deflationary as opposed to inflationary.
Mm-hmm. So they're actually, well, I know it's all virtual, but if they burn in the coins, or for instance, if it's 1 million coins and they burn 500,000, that will make the 500,000 that's left worth more.
Yeah, that's the idea. It's not a guarantee. I mean, but if we have $100, we're splitting it between 10 people, everybody shares $10, right? If we get rid of 5 people, we still split that $100, now we all have $20, right? So the more scarce something is, ideally, the more valuable it is. But again, it's not a guarantee. It depends on supply and demand always. But as we reduce the supply, the relative demand usually goes higher, meaning the price goes up.
Okay, one last question. So if they burn it, is it possible that it can bring it back at any time? Or it's gone forever? That's
always going to depend on the token. But usually, most of the time, they'll get rid of it forever. But like the U.S. government, they can destroy dollars today and create more dollars tomorrow, right? So they can do whatever they want essentially. But generally, whenever you see a token burn, they're only ever going to reduce the supply, right? Which is why Dogecoin will never be worth $1 because there's an infinite supply and they're constantly creating more of them.
Gotcha.
Yeah. Just to speak on that too, and try to close up. So yeah, basically, when they actually do the burning for the token, is they take a certain amount of token, they send them to a wallet to which nobody has access to. Nobody has the private key to that wallet, which means no one can send them back in the market from that wallet. And one of those wallets is like, for Ethereum, for example, it's 0x0000 and 14 zeros. And then for Binance, it's 0.0x00 and then dead at the end. So yeah, when they do that, normally no one should be able to send this token back to the market.
Okay.
Yeah. And also, there was also another question about one of the if by storing your crypto on your private wallet is better to avoid tax, to pay the
Yeah.
capital gain. Yes, and that is correct. When you put them in your wallet, no one has control, or no one going to come and request for the information about what is in your wallet when you bought it and all that stuff. Because the wallet is definitely decentralized. There is no information about you in regard to that wallet. So you literally have your money in there, and you do what you want with the money, right?
Okay, thank you. My name is Omar. Thank you for that, Emmanuel. Appreciate it.
No problem, Omar. All right, guys. Thank you very much again for the time today. It was a pretty interesting session today. Crypto is very, very interesting. It's still growing. It's really, really huge, to be honest. There is more to come, more that is coming up. But yeah, we usually have crypto meetings on Wednesdays. And for those who are not into our Telegram group yet, you can join our Telegram group, and we will keep you posted about upcoming sessions. And also our website is also there. Brett just shared it. So thank you very much, everyone. If there is no other comment, and Brett, do you have anything else to add?
No, that's good. Just thanks everyone for joining. Thanks to you, Emmanuel. Thanks, Mike, as well, for answering all of the questions. Always super good. And yeah, we'll probably create the next event on Meetup as well. We're gonna let you know. And please, if you have any question, just go on Telegram, ask on Telegram, and there is always someone to answer. Thank you, everyone.
Thank you, guys. Have a good night, guys.
Hey guys, the link for Telegram.
Oh yes.
Oh yeah.
Thank you.
Thank you.